Welcome back. The conversations continue here at Davos 2025. We're celebrating two milestones, 25 years of CNBC-TV18 and 20 years of covering the World Economic Forum's annual meeting. And joining us now is a man who's also celebrating a very significant milestone. HCLTech has turned 25 since the time that it listed, and what a journey it has been as far as the company is concerned. In fact, I was just taking a look at the numbers, a CAGR growth of 20.5% over the last 25 years. CVK, congratulations and many thanks for joining us here on CNBC TV18. Thanks very much for your time. Let me start by asking you about the last 25 and the many milestones that you've been able to achieve in terms of both revenue, profitability, the returns to shareholders, and then I'll talk to you about the next 25.
Yes, it's been an amazing journey for the company, and of course it's trust of our clients and the dedication and passion of so many HCLites and so many leaders who shaped the journey of the company. And we've delivered industry-leading TSR, 20.6% CAGR TSR over the 25 years, even beats Warren Buffett's record. So we couldn't be in a better place, and we are very happy about that.
Well, speaking about Warren Buffett, let's talk about the future, CVK. And at this point in time, it certainly seems like the mood is better. There is more optimism, specifically with respect to the US market. That's the mother market as far as you're concerned. Yes. What are you picking up on?
Yes, certainly there was a lot of uncertainty and lack of clarity when we met here last year. But this time, even though some of the things are not clear yet, but at least people are, most decision makers seem to know that this is the direction things are going to go, because everybody's positions are clear and they want to plan. I think the biggest theme everyone is talking about is how do you become very adaptable? Adaptability to any changes, whether it is regulations or geopolitics. I think that seems to be the biggest theme. And I think people have also prepared to some extent, because none of this is new, whether it is tariffs or geopolitics. So I think we are better, leadership seems to be better prepared to deal with the change that could be coming up.
And in terms of business confidence, and that translating into perhaps higher spends?
I think so. There was a holding pattern when we met last time. And I think over the last 2 quarters, we already see the discretionary spend picking up. Financial services, we saw a good pickup in the last 2 quarters. Last quarter, even the technology and all other verticals, we see some good pickup. And I'm really hoping that this momentum will continue. And given all the conversations, I feel more confident
now.
Well,
speaking of the conversations here are all about AI in its different facets. You're going all in as far as agentic AI is concerned, and that seems to be the big theme for you here in Davos this year.
Yes. So, Sheeren, the way we are looking at AI is, first and foremost, every service that we deliver needs to really benefit from generative AI. And that means we are proactively talking to our clients as to what is the art of the possible. If we believe we can provide maybe 25% more efficiency, we are not shying away from it. We are talking to them saying, this is the art of the possible. We need you to walk this journey with us. We have an amazing platform, AI Force, which leverages all the best of breed language models, small language model, large language model, agentic, all of that. And we are proactively implementing it. We already have a very good success for 6 large clients. And we want to roll out to 100 clients by financial year 26, which is March of 26. And that journey is going well. That's on the service transformation side. There is another very big area, which is the value stream innovation. Like if you're working for a bank, there is an opportunity. We built a solution for trade surveillance. We are working for a very large hospital for the physician assistants. So these solutions are what we're calling as industry-focused repeatable solutions. We have come up with about 70 solutions. All of them have at least 1 or 2 clients who are already using it. They're seeing the value. And we want to kind of build on it, right? Eventually, our business is a big part of our business is services. The way it will evolve is it's going to be more solutions. It's a combination of IP and services. That's the way we believe the industry will evolve, and we are just walking that path.
And that's exactly the conversation that I've been having here in Davos with your peers as well on making this transition from being services to being services and IP driven and IP led. But you know, the 6 success stories that you spoke to us about, can you give me some color on the kinds of impact you've been able to drive on account of the adoption?
Yeah. So I'll give you an example. A very large financial services firm headquartered out of US, where we are one of the largest service providers for them. They have a modernization program. It's a 5-year modernization program, and they're spending roughly $1 billion a year. We believe through all the interventions, we can finish that in 4 years, which is $1 billion saving.
Okay.
And we have created proof points in a certain segment of the program to demonstrate this. So, and they're very happy to adopt it and really walk the journey with us.
So would you say that it's largely the BFSI side that is the early adopter at this point in time?
It's
for
BFSI. This is really how do you use generative AI to accelerate a modernization journey. But there are other use cases, like for a very large technology company, we are using generative AI to significantly reduce the test cycles, and also the number of test cases are significantly higher, which increases the quality of the end outcome.
Okay.
And there is a big healthcare company where we piloted the physician assistants.
Okay.
Conservatively, it's expected to save at least $100 million a year. But the challenge there is how do you drive adoption across all the doctors who are part of that healthcare ecosystem.
Right.
And that's a journey that's just begun.
Well, speaking of the journey now, let's talk about your own journey with respect to your people and being able to adapt to the future and the future needs of your clients. How many have you already been able to train to deal with an AI world, and what's the outlook on that front?
So I think we have 2 programs. One is really the users of AI, right? They're not the developers in AI, which pretty much everybody in the company needs to be a user of AI. Very large percentage of our teams are already trained as to use some aspects of AI, whether it is GitHub Copilot or other M365, many other things. Now, there is also a set of people who are building new applications, fine-tuning, LLM ops, all of that. I think we have about 4,000 people who are very capable to build, engage with clients, and who are architects and things like that. And they're also significantly deployed in the 8 labs that we have built over the last maybe a year or so.
So in terms of driving efficiency within HCL, what have you been able to unleash and unlock?
So HR is a big topic, right? Because we are constantly skilling people, redeploying people. So we have built a solution for people deployment because the skill matrix that we have is very complex. So I think just by all the data that we have, the projects that people have done, we're able to precisely kind of identify the person for the role. What used to take maybe a few days, we are able to even do it within hours. So I think that's a significant thing. That's something we're trying to scale up internally significantly.
Let's now talk about the bread and butter stuff. You've done the quarter, so I won't go back to the numbers, but essentially I want to understand from you, the margin trajectory from here on. You've seen 20% kind of margins. You're below that at this point in time. When do you anticipate being able to get back to that?
So we have a program called Project Ascent, which is really geared towards improving margins. And this quarter, we almost had 100 basis points benefit. But Sheeren, while we are significantly gaining from those programs, we are also investing a lot more in AI. So we are more focused on making all the right investments than necessarily delivering maybe a 1% higher margin. And we are also we're not covering the entire market. We also need to invest in sales. So that's another area of investment. So definitely a lot of improvements are happening, but we are investing for the future. And even on the other front, right, it's not about just everybody is chasing growth, but the most important thing we are focused on is to client relevance. Because the world is changing so much, technology is changing so much. the existing operating model is not going to take us to the next next few years.
So what will have to change? And that brings me to the very important question. 25 done. Let's look at the future over the next 25.
Yeah.
What is no longer relevant, or what is sell past its date? Past its sell date at this point in time, as far as the next 25 is concerned. Where will you need to make changes as far as the operating model is concerned?
I think the model that has been extremely successful, I think the time has come for it to be disrupted. IT services as a business, I think we are at the cusp of a very big inflection point.
You've been one of the brave people who've been saying this for a while, haven't you?
That is the reality, because we've always had this linear growth of people and revenue. And I think definitely if anybody is very successful in leveraging AI within their organization for their service delivery, we should definitely see a decoupling of headcount growth and revenue growth.
Okay.
At least a company should be able to deliver 5 to 10% growth without having to increase the number of people. You may end up paying more, your wage bill may go up, but headcount cannot have a linear growth, because the biggest benefit of generative AI is to how much more efficient you can in whether software development or in operations, everything, right? Product development.
Sure.
And that has to reflect in the business model. And we're continuously driving how can we get more value, because every program unlocks some human capital. Now, how can that human capital be converted into growing the business? So that's really the journey. It's a tough journey, but we are at it.
I would imagine it's a tough journey, but since you're talking about this decoupling, what does it mean in terms of the numbers that you will have to hire? Because this has, of course, been an industry that has been driving employment of a certain kind of people. Now, what happens as far as headcount is concerned as you look at this decoupling that you spoke of?
I think the headcount growth would not be in the same proportion as revenue growth. We will continue to hire, because with some more uptick in the external environment, there will be good growth. And maybe if growth was X, headcount growth will be X minus 5% or something.
Okay, so that's as far as headcount and revenue and that being decoupled over the next 25 years as you change your operating model.
That's not even 25 years. That's here and now in the next 3 to 5 years.
Next 3 to 5 years, you believe that that's likely to happen?
We should start seeing signs of that. I mean, we're already seeing, like this year we've grown, we've given a guidance of 4.5 to 5%, but our headcount would be more or less flat. So that's really the beginning of a new wave. That's what I would say.
The other transformative changes that you believe that you will need to make, the industry will need to make as well over the next 25 years?
Its services are, you need to have a platform-based approach. I think there is definitely a lot of emphasis on when we've heard of software as a service, but service as a software, that's another trend which is evolving. And it's about using the right instrumentation and right tools and platforms. And also, it's not just selling services. You combine it with some of the IP and the solution and the software products that we have to really deliver an end outcome. I think it's a combination. I think more and more the services business model will start looking like a software business model.
Well, you delivered a very strong quarter, but the market is now, of course, worried whether you will be able to do better than what you've been able to deliver, and whether there is likely to see some degree of underperformance. What would you have to say to that?
I think we have delivered the industry-leading growth both in the up cycle and the down cycle. I think that is the biggest proof point. Over the last 4 years, 2 years of up cycle, we delivered industry-leading growth in services, and 2 years of down cycle, we're leading the industry in growth. And I think that's a proof point for what is to come.
In terms of deals, the pipeline, of course, is looking very, very strong, at a record high at this point in time. As you look at unexplored markets, as you look at unexplored verticals, how different do you believe that you're likely to be as an organization in terms of both those areas over the next 25 years?
Yeah, I'll start with the verticals. I think we are quite well diversified in the private sector. It's only the public sector is where we have very little presence. So we've created a new team and a leadership to drive the business in the public sector, especially starting with state and local governments and also the federal government. We think some very good opportunities will evolve, especially which is led by our software and the services around it. So that's a big play, public sector. And in terms of geographies...
And public sector, you're talking about globally or...?
Yeah, it's globally, but we're really taking a big shot in the US to start with. We're already present in Australia in the public sector, but US is the next, UK will be the third. And India, we're already present for our software business. We pretty much serve almost all the departments. In terms of geographies, I think... we had a footprint to grow Germany, France, Australia, Canada, and Japan. I think that's already it's in good motion. We are